All right. Welcome, everybody. We got a
Hey.
Bank on Yourself afternoon here. Little not your average taste of tea and crumpets and all the other fun stuff we can do on a Friday afternoon. We got Evan Greathouse here. Welcome, Evan. How's it going, sir?
It's going super great, man. Can't
Dialing
complain.
Dialing in from the land of the free and the home of the brave there in Nashville, Tennessee. And then Mr. Brandon Neely. Ohio. How's it going, sir?
OH. That's what you
That's
say.
right.
You have to say
Go
IO.
Buckeyes.
OH. Yeah, we're doing good. It's a little rainy out here, and we've been coming off of I don't know if you'd say a high, but we were at a real estate conference and just helping a lot of people, and yeah, just trying to get through that wave.
Well, awesome. So we're just making things happen and enjoying it. But we came across something that shook me to my core. All of us saw it earlier this week, and I just felt like we really needed to get the word out to everybody that this was happening. So I don't know what else to say except we got to watch it. And it's about a 3.5 minute clip. So guys, get ready. We'll go ahead and hit the screen share. And Julia, if you don't mind, let's see this clip.
Planning for our future. And unfortunately, ours did not go well.
We're gonna show the world that this was a huge and utter scam.
From the racetrack to the courtroom, NASCAR driver Kyle Busch and his wife suing a life insurance company, claiming they lost more than $8 million in what they call a scam.
Action 9 attorney Jason Sturjanky spoke with their lawyer and explains the insurance policy that the couple claims was all a scheme.
Here's the lawsuit right here. It's about a certain kind of life insurance. The Bushes say they are misled. Their lawyer claims you could be too.
The 18 gets into the back of the 4.
NASCAR champion and Lincoln County resident Kyle Busch is used to racing, risk, and big money.
Busch is going to win at Pocono.
Busch and his wife say they didn't bargain for this.
We tried to do what we thought was best for our family.
For planning for our future. And unfortunately, ours did not go well.
They say an agent sold them life insurance through Pacific Life. They claim the agent failed to reveal the true risks, that it was a high-risk product, a fundamentally flawed plan. They say the agent promised they'd pay a certain number of premiums, and then the policy would be fully funded, self-sustaining, and generate tax-free income for retirement. Their lawyer, Robert Reichard, says not so.
And they're just misleading consumers every single day that this is a retirement plan that just happens to be a life insurance product. And it's just not. It's a life insurance product. It's a very expensive one. It's a very complicated one.
There are different kinds of life insurance. You've probably heard words like term, variable, whole, and universal. The Bushes say they bought what's called indexed universal life insurance, IUL. IUL is legitimate, but generally very complex and riskier. It's based on the market, so stocks and bonds. You could do very well for yourself or not. There's no guarantee.
In fairness, IULs, is there ever a good time to buy one?
Not that I've ever seen.
Some of the biggest consumer advisors, like Clark Howard, warn against IULs.
In my opinion, from the ground up, they are structured so unfavorably for a consumer or an investor that they have no place in your portfolio, period.
This just isn't happening to athletes and celebrities. Right. This is happening to teachers, police officers, veterans.
There are a lot of life insurance policies out there, so make sure you ask questions. If different agents give you different answers, you probably need more information. Shop around before committing to one. Now, my personal comfort level, I keep insurance and investments separate. And if you run into problems, you can reach out to your state's Department of Insurance or, of course, a lawyer. In Concord, Jason Stujanky, Channel 9, Eyewitness News.
Jason tried to contact the defendant. So far, no response. Pacific Life replied saying it will not discuss the case for privacy reasons, but says the company is committed to fairness, integrity, and that it takes this responsibility very seriously. You can read the full statement at WSOCTV.com.
All right.
Wow. All right. So there you go. Thanks so much, Julia, for putting that on. And well, all right. So guys, what's going on here? So basically what do we have? We have Kyle Busch and his wife, race car athlete, multimillionaire, assuming, bought an IUL, an Index Universal Life policy, and claims that money's going up in smoke. So give us the skinny on why that would happen. Like, aren't those things supposed to grow every year? And according to the stock market, we're supposed to get an average rate of return of 6 to 10 to 12% a year. Evan.
Yeah, well, in an ideal world, sure, yeah, that'd be great. I think the issue is that we just cannot expect, and actually, like, if any agent or otherwise tells you that straight line growth in the stock market is possible forever, then they're sorely mistaken. And I think that's really an expectation that was more than likely not explained very well by the agent who set them up with that. I don't know if they were new or if they just didn't know better. I'll give everybody the benefit of the doubt, but yeah, straight line growth is a sour expectation that will be sorely met for those who.
But they lost $8 million. I mean, can't an IUL hand? I mean, I meet people all the time who have IULs, Index Universal Life policies, that are chunking in $100 a month, $300 a month. If they can't do it with $8 million and make the IUL work, Brandon, can you make it work on $300 a month?
I mean, here's the thing. I've lost clients because they got sold an IUL by somebody. And I think about the agent, whoever the agent is, oh my gosh, how he wasn't just some new guy. That's a big case, right? So he had multiple people that helped him with that case. It's a race car driver, so his cost of insurance was pretty high, I bet you. Mm-hmm. And all of those kind of things that he had to go through compliance to get this approved and then issued. And then, okay, so how long was it going before he realized that it was a problem? We don't know any of those details, but the reality and what I think about is, man, when we are banking yourself professionals, when I think about Nelson Nash in the infinite banking world, he said from the beginning, we do not do IUL. It is not the same thing. Again, it is not the same thing. It is not an investment. These are things that, unfortunately, people are going to put us in the same boat as them and say we are like that. And I just want to say right here, right now, we are not like that.
So why not? Mm-hmm. Why not? What makes Evan? What makes bank on yourself, infinite banking? What is the difference between whole life insurance, dividend paying, properly structured, mutually owned insurance companies with non-direct loans, and all the things that come with bank on yourself? Isn't this just one more scheme in the pile here?
Yeah. So there's even though they're both life insurance products, there are some similarities, but the two products are vastly different. Whole life, there's even different kind of setups with whole life. It comes down to the insurance company you're going with. There's a lot of complexities here, but simply put, though, indexed universal life is tied to the index that it's, in the stock market, that is. And so it has all the potential upside, so they say, with no downside, again, so they say. But what a lot of people don't realize is there's some additional costs that whole life doesn't have, that indexed life does have, universal life insurance has. And the one guarantee that universal does have is that the costs are going to go up, guaranteed, for the rest of that person's life. And in every case, astronomically increasing as the person enters into their senior years and stuff. And I can only imagine what that's like for a NASCAR racer as well. It's probably even more, amplified as far as that goes. The cost of insurance is increasing even faster. So there's a couple of little nuanced differences there.
So in the deal, it says the lawyer, Robert Riker, says it's just misleading consumers every single day that this is a retirement plan that just happens to be a life insurance product, and it's just not. So, okay, so I have a few comments about this, but the attorney here said it, right? It's misleading consumers that this is a retirement plan. Now, those words are very interesting. The words retirement plan means something. Attorneys are, I saw my joke of the day calendar said something like, why do attorneys and sharks get along so well? They're part of the same club or something like that. So I realize there's some really good ones out there. And I actually really agree with Robert Riker here. Many insurance agents are wearing the retirement planner hat and wearing a disguise, really. Life insurance is life insurance.
Yep.
Whether it's whole life insurance or index universal life insurance, it's an insurance product. Robert Riker is exactly correct. And actually, I'm happy about that. So the words retirement plan oftentimes refer back to a qualified retirement plan, which goes way back to the 1970s, 1974, when they passed the ERISA Act, and they instituted, half-baked ideas like the IRA and the 401k and lots of the other stuff that is ruining people's lives right now. 77% of retirees still have debt beyond their mortgage. The average 401k balance for someone in their mid-50s is 160 grand, which sounds like a lot, right? Yeah. But what's that going to? It's going to be about $300 a month in retirement income for that person. Pathetically small, right? It's a huge failure. Retirement plans have been a failure. So we have to look elsewhere to solve the retirement crisis. And what works, right? I don't care what you call it. This is what I have a problem with attorneys. I don't care what you call it. It's what it does that matters to me. What it actually functionally does. Call it whatever you want. Call my money a dry sponge if you need to. But as long as I can have access to the money, I can spend it at will. I can have as a stream of predictable income in retirement and in my golden years. So life insurance is one of those tools. Call it a life insurance product. I want you to. However, when you start looking at IULs as a retirement plan, I'm going to get off this soapbox and I want to pass it over to Brandon here in just a minute. But the specific problem that you guys have brought up, the increasing cost of index universal life insurance, is something that is problematic while you're growing your money because you're getting older every year, right? That cost of insurance for IULs goes up every single year, and there's nothing you can do to stop it because you keep having birthdays, for goodness sakes. If you could just stop having birthdays, we'd be okay here. But no, we force ourselves into these things like IULs that keep getting more expensive. And yes, there's going to be good years when the market does bonkers, crazy vertical lifts like it did earlier this year. And then there's going to be down years in the market, but we will always have a birthday. So we're always getting more expensive. And even for someone who plunks in $8 million or more, they said they lost $8 million. I don't know how much they put in the thing.
Yeah, that's what I was wondering. How much does he lose? How much did he put in? And how long did it last?
How much did he put in? But that he seems young. He doesn't look like he's retired. He's still driving a NASCAR or whatever. So when you get, and this is what I want to get to, and then I'll pass it to Brandon. When you climb that mountain and you're paying more in your 30s, 40s, 50s, and 60s every year for your insurance, at least you're funding the policy. But now we actually we take the cyanide pill for the IUL, because when we retire and we start taking money out of the policy to spend at the grocery store, and we stop paying premiums into the policy because we're retired, for goodness sakes, we want to stop funding this thing eventually. Now we're in this double pain problem where we're getting the most expense of insurance we've ever had for this thing, and the index is going to sometimes do great, sometimes do poorly, but we're taking money out of the machine right when it needs the money the most, and we're not funding it anymore. In fact, we're withdrawing funds out because, hey, you know what? We kind of need to eat, please. This is why every IUL I've ever seen with an in-force illustration shows the policy falling apart with modest and medium expectations, not even the worst case scenarios, in the person's 70s or 80s of life. So, Brandon, am I way off track here? Or what would you say to that?
Well, I think we're in a world of, I mean, if 401ks are the retirement plan and then that doesn't even make it, that's a problem. And this whole, like, man, it's a power of a contract. What I love about certain tools that we do, whole life policies that are designed appropriately, high cash value, right? We can build it appropriately, but the reality is, like, things can happen. I don't know
Sure.
about zombies and all that, and so that's something I think is important. Then there's, man, oh my gosh, I swear I feel like I'm having to argue about the difference between how I'm different than those guys, or 401ks or any of those kind of things. But I don't know. I still think the guy, whoever they were, the client, I overeducate maybe, or I'm helping them think through it a lot more, and I'm not just going to do a fast one. Find somebody that can educate and that will take the time with you. Because I know I do with combo writers. They're really good policies. They're built like that, and I tell people up front, if you don't convert the term over their whole life, it will cost more money. Right?
Evan, what do you?
That's important to know.
You're right. Yeah, but with the combo rider, which is a rider attached to a whole life policy,
You can
you're saying
jettison you can jettison the term if
you
you
can
need
get
to.
rid of it. Yeah, you can get rid of
Yes.
that increasing cost where you can't do that with an IUL. Exactly. That's a really smart point,
Mhm.
Brandon. Okay, so Evan, I want to ask you this. I don't know who the guy was who was talking at the end, but he sort of dropped a little financial advice. Did you catch that? He said, I've got the transcript pulled up here. He says, now my personal comfort level, I keep insurance and investments separate.
Mm.
Okay, so what does that mean?
Way too
Was
much to say about
Kyle
it.
Busch doing that? Was he saying, "Hey, this idiot Kyle Busch bought something. He got snookered into this terrible pyramid scheme, and all life insurance should be just term insurance only, and put all your money into mutual funds."
It
What
all
was he saying
separate.
there? And how would you respond to that?
You know, good on him. It was great. Fine. Buy term, invest the rest. Is a saying that a lot of people have said for many years, and it's I don't know, maybe it's worked for some people. So I'm not bashing that or anything at all. What I think he doesn't quite fully understand, though, is that he can do that with whole life. You can keep it's if we're going based on his logic, it's just life insurance and keep it separate, then by all means, like, it's still there and accessible to you, though, if you needed it. So keep it separate or don't. Whatever your preference is kind of one thing I would say to that. And two is the thing that he's talking about, life insurance, like it's a blanket statement, like all life insurance is the same, you should keep it separate. It's just not true in this case. And once you've grasped the concept of bank on yourself, this really does allow you to explore other alternatives, and it gives you the full autonomy to decide if you want to keep life insurance and investment separate, or I ask my clients all the time, does having access to the funds in a whole life policy ever take away from any of your investment options? And the truth of the matter is that you can access a great deal of what you have in the policy anytime you want. It's your money, and use it for investing or for putting into paying off debts or whatever it may be. There's options galore. So
Totally. Yep.
I would respond with something like that. Just let's decide what is going to work for each individual person. What's your goals? What outcomes are you looking for? Do you want to utilize it as a retirement income, quote unquote? If you do, it's I don't know how to say that, like, without just blatantly refuting what he said. Like, but you can actually start pulling from the cash value and use it as a supplement to your income. It's entirely possible. There's all kinds
Mr.
of
Brandon,
stuff.
what do you think, man? Do you think we should keep our insurance and our investments separate?
So a couple things. I think history, it's very important to look at the history of things, right?
Uh-huh.
And seeing the history of, we used to be savers, right? And now it's not even incentivized to save. We don't have any benefit to saving in a savings account, which again makes a problem. We then are told save in a 401k, which is not a savings, it's an investment, and it's locked up. And so I go back to Pamela's book, page 55, right? This little pyramid, right? Having the safe liquid cash, these are upside down pyramids. What they did, remember again in history, is the market was going up, things were changing in the 80s. IUL came on the scene because people were not, they were told to buy term, invest the rest, right? They were told that. So then IUL was built, right? Now we're seeing, wait a second, everything is going up and topsy-turvy, inflation, the whole financial world is going crazy. How do we help that?
Totally.
And so that's where we have to have, where we're in our best, our clients are our best, we're focusing on them first, right? That's what we should be doing, not about commissions. I love what I do with infinite banking. This is going to make it harder, or banking yourself. It's going to make it harder because people are going to be like, you're like that. And I've seen people lose all the time. They're like, well, you didn't show this big thing. I'm like, that's because that's not what it's for.
It's so true. The people who ruin it for the rest of us, so to speak. I have a feeling, I don't know this story, but with Kyle Busch and his wife, they seem smart, they seem intelligent. They don't seem like financial experts or insurance actuaries. They don't seem that way to me. They seem like race car driver family, right? I have a feeling that nobody who has an IUL understands it at all. In fact, what was his name? Samuelson is his last name. I can't remember his first name right now, but he's on record saying nobody who buys an IUL understands it, and nobody who sells an IUL understands it. And only a couple of actuaries really understand it. And I'm going to remember the guy's name, but we're almost out of time, so I'm going to keep it brief.
Well, and I do want to say, most of the time, I've seen this with clients. They've used this book, right, here we go, this book, and they've said sell an IUL, right? They've used this book and then sold IULs. And it's in the book where he says, I don't do IULs. I would not do an IUL. It's in the book.
Right, it's in the book.
It's in the book.
Did anybody read it?
How can they do that? I don't understand.
Pamela Yellen's got a whole chapter on why don't use Index Universal Life. Now, I'm actually going to agree with the gentleman at the end of that clip where he says keep your insurance and your investments separate. And here's why. Life insurance and cash value life insurance is not an investment. And it shouldn't be treated like one. But IUL is a mutation that attempts to smash them both together, inappropriately so. So, we invest money we can afford to lose, that we are able to lose. We save money we cannot afford to lose. That's my distinction that I would put on the two. And with insurance, we used to think insurance was just for covering loss. But, and it's true. But with life insurance, if I can save money in my life insurance contract that grows on a predictable basis, and it grows even guaranteed, then I can use that money for many things and then keep some other money for my investments. I feel like IUL tries to slam the two together, and because of the increasing internal expenses that nobody understands, unless you're sitting there reading the insurance contracts, in which case I'd encourage Kyle Busch to get out of the insurance contract business and just stay focused on the road. But if he's saying that he's lost more than $8 million, here's what I think happened. The insurance agent sold him something that Kyle didn't understand, his wife didn't understand, and even the agent probably didn't understand. And now Pac Life, the named company here, is having to deal with explaining a contract that the agent should have done in the first place, and that Kyle should have read in the first place. Now, Pac Life looks like the mean old bad guy, but they wrote a contract, and Kyle signed his name saying he understood that contract, and now he's suing because he lost money in a contract he said he understood when he signed up for it. Now, that's not to give Kyle, kick him under the bus. Pac Life wrote a contract that I think was way too complicated, and all IUL contracts are way too complicated, in my personal opinion. Guys, we got 30 seconds left for each of you. Give us your final thoughts. What should someone do if they're watching this right now and they have an IUL? Can they get out of it without having to sue their insurance company? Evan, I'll let you go first.
Yeah, I was actually kind of, hoping there was some sort of like insight into that, but as of right now, it doesn't sound like there's any ideas as to like what all was offered as a solution.
But if I'm watching this and my name's not Kyle Busch, can I get out of an IUL? And if so, what's the best pathway? 30 seconds.
Yeah, because and that's kind of where I was going. Is like if they ever offered any solutions, which by the way there are ways to get out of it. You can do something called a 1035 exchange. And that is going to allow you to change from one product in one insurance product to another type of insurance product of similar kind, and like a whole life policy set up like a bank on yourself typed whole life policy, and that has guaranteed dividend growth without the increasing cost of insurance and everything. You could do something like that as long as there's any cash value in there. Now, I don't know if he didn't have any cash value because of the increasing costs, and maybe that's what lapsed the policy. I'm making some assumptions here based on an educated guess, but I don't know if he literally just didn't have any other options, or if he's choosing to surrender the policy and lose, quote unquote, all of that money, then there may have been other options for him. That's something that we'll have to just kind of see whenever it becomes public.
Yeah, very cool. Love it.
Yeah.
All right, well, Brandon, how can folks find you? Evan, how can folks find you? We'll start with Brandon.
I just wanted to add, also ask those questions. Just as much as we're asking on the IUL, and this is coming to light, I tell people, ask this of your 401ks. Understand. If you can't understand how 401k works, why are you in it? Right? It's the same kind of thing. And your best investment is in yourself. As I use these policies, I use it to invest in real estate and other things that I know, right? But that's the biggest thing. We have abdicated our investment things to somebody else's business, and we need to start investing in ourselves, and build a good foundation. That's what Pamela teaches, is the foundation. Build the foundation and invest in the right things, which is you. That's where I think. And so you can find me at wealthwisdomfp.com, wealthwisdomfp.com, and you'll find Brandon or Amanda or somebody there.
And Evan, you're
I'm Greathouse FS, as in F as in Fox and S as in Sam. So greathousefs.com.
So good.
Find me there.
You guys are both rock stars. Thanks for jumping on and being so kind to share your ideas and opinions. We might have some more fun, do this again sometime. Good to have everybody
next
here.
time we'll send emails to remind people or tell people, right? We're here.
Right on. That's right. You guys have a good one. See you soon.